Welcome on into today's live. We are looking at the S&P, which is up about 0.5% as we speak right now. Yet we're seeing a bit of a shift in a bunch of different sectors that maybe haven't been as strong the past couple of days are now seeing some strength. And what has been strong is now seeing a little bit of weakness. So we're going to talk about some of that here in today's live. And we're going to kind of see what we get into the end of the day. Decent moves in the bond market. Not a huge move on the dollar, just kind of down a little bit. S&P right now is up about 0.5%. QQQ tech is actually down about 0.25% right now. Now, here's QQQ's chart, and it's still right up in here, right? It's not like we just saw the NASDAQ just dump, down to like that, right? But what's strong today? Look over at IWM. Now, this has been weak. It's strong, right? Small caps are strong. It's actually up near the high of the day right now. DIA, the Dow, also up near the high of the day right now. That's also very, very strong. So what we're seeing right now is a little bit of a shift out of the stronger tech that was like kind of the story of the past like 2 or 3 weeks into maybe like the Dow, into maybe more of a safer stock, and then also into some of the stocks that have been beaten down a lot. So a little bit of a shift. And XLF, the financial ETF, is up almost 2% today. It's up 1.75 or so right now. So we're seeing some good strength across banks, which had been, pretty weak over the past couple of weeks, right? So you're seeing a good move. Also, energy, XLE is up about 2.5%. So oil stocks doing well. Why is that the case? Oil is up 5% today. Look at that massive candle coming right up into a spot that we're watching right here, that oil has found support, looking at that to potentially be resistance now. And if not, hey, maybe oil is going to have this final flush move and then start to kind of push right back up into the 80s again. And then we'll have a reaction up there around, the lower 80s, which will be a key spot to watch on oil. So we'll see. Those are the developments, at least for today. A little bit of wonkiness, right? Because it's not like everything is up, everything is down. It's kind of like a big mixed bag. Gold and silver down about 1%. Bitcoin's down about 3%. So kind of still trying to kind of hold this flag, although it just made a lower low from the consolidation over the past like 2 weeks or so, a week and a half on Bitcoin, down to 26.5, and then it bounced about $500 or so on BTC. We'll see what happens if it gets down to 25K. That'll be a kind of a big test I'd be watching on Bitcoin if it gets down into that level. So we'll see. But that's the story of today. If you guys are tuning on in right now, hit the thumbs up button. I'd appreciate that. And let's dive on in. Dive on in. Flip of what is going on. SPY breakout around 399. Off the races tomorrow, Wednesday. Let's take a look at SPY and where are we at right now? Yeah, we're about $1.20 or $1.50 away from that spot, and that's pretty much where we got rejected this morning, right? Look back to that spot this morning, and also even a couple of days ago around that similar area, like 25 cents north of that. We also got rejected back on Thursday. So 2 spots. And to be honest, like, here's the daily. Let's go to the daily chart. The daily constructive setup is still there. Like we've been talking about the past couple of days, or even like last night. What the pattern that we have right now is like on this daily is like this on from a swing high to swing low, because what we're building. And we've got these higher lows and we've got these higher highs. And so, my suspicion is that we're going to be up into this area at some point in the next, weeks to months, unless we get a catalyst that turns the tides. And a catalyst meaning that we get something that's substantial enough to shift the tides out of this trend, right? Could that be 1 CPI? Probably not, unless it's like really, really crazy. Probably maybe 2 CPIs in a row that are like way out of line or that are way off expectations, up or down. Or we get, more bank issues. We get another massive piece of news there. Who knows? Like something along those lines, like something breaks, like something happens, then that could break this pattern. But if we don't get that and we're kind of just like, bouncing around, like I think we're going to get up in this area. And I think it probably lines up around this 430 or so on SPY, which is right here. That was the August highs. So that would probably put us, I don't know, somewhere up in here would be my suspicion. Could be totally wrong, but that's the pattern that's building right now on the S&P. And again, at the same time, if you go look over at, I'm going to pull up fear and greed and see what this looks like. We are still in fear Coming out of extreme fear, I think from a couple of days back, if I go back to the timeline, look on this, what does it look like? Yeah, we did dip down into extreme fear briefly here back in mid-March. And so last time we got down to extreme fear, we had a massive move. It was really the September and October lows. Not saying we're going to get that, but we had a big move. We didn't get down to extreme fear back in December, late December, and we had a big rally off of that. So we'll see what happens, but I wouldn't be surprised if this can trigger a nice move, right? And we're just in the stages. Now, of course, we're looking at it from, everyone's like looking at like day to day, second by second. Zoom out, look at the weekly chart, and look at that stuff. Last time fear we got down, into the deeper levels of fear, right? Was here. Extreme fear was here. You go back to June, we were in extreme fear again in June. Go back to May, extreme fear. So where's June and May, right? Literally here and here. So all of these had decent runs to come from that, right? And we're only about 2 or so weeks off of the lows of this recent pullback. And if this higher low holds, again, if this level breaks, right, all bets are off on that idea. But if this level holds around 380 on SPY, which, we're about $17, $18 off of that level. So we got some breathing room for now, right? We're looking for maybe a bigger push. And each of these had, let's see, this one had about a move from 375 to 320, about a 45 point move on there on SPY. This one had a much bigger one, right? Let's call it 350 roughly, all the way to 410. So about a $60 move there. This one had a move from like 365 to like, let's say 430. So big moves from some of these levels. Big moves when we've gotten on the fear and greed. And I look at this weekly chart as well on SPY. I'm like, let's go to the monthly, right? I think it's pretty nice. I mean, we tried to get up there and we tried to break out over this level. We had a bunch of highs up around this, 410, and we barely, got that, and we just wicked above last month. And then now we came down, and if we break down below like these wicks that we have down in from like December, January, and now even March lows, so they're all in a really nice spot. If we get pressure to that level, I think we're gonna potentially test, if not go lower than these lows, and it could be a big move down. We'll see, but we're kind of just in limbo right now. We're bouncing in a range from like 380 to 410. It's been like the general range. So we got to break that range, and right now we're like right in the middle of it. So that's how it's shaping up on the S&P to start things off for to finish things off for the month of March. Any stocks like SPY? If you're looking for a stock like SPY, there is VTI. It is the Vanguard Total Stock Market ETF, very, very similar. There's also VOO, which is the Vanguard S&P 500 ETF. There's plenty more of that came from, but you can even do a quick Google search and say, ETFs like VOO or like VTI, and there'll be a big list. I personally, it's not necessarily the same thing, but JEPI is one of my favorites. This is the JP Morgan Equity Premium Income ETF. It's going to essentially diversify you into a ton of different stocks, and it pays a monthly dividend. The dividend yield is up around 12%. Limits you on the upside, essentially, because they're like kind of selling covered calls against positions. But if the market generally goes up, these stocks will generally appreciate, and you're also getting paid monthly dividends that you can just have go in and reinvest. So it's like almost like, to me, it's like this. You're maybe not going to see the same upside as you would in a tech stock or in, let's say, just buying SPY if we have a bull market for like, let's say like a 6 or 8 month or a year, run of just up, like, month after month after month. So the market goes up 20%. This may not go up 20% in terms of the stock price. It might go up 10, 15%. But in the process of that year, you're also getting paid that 12% dividend. And on top of that, you're getting that cut up into like 1% increments that are just compounded every month. And so if you set up automatic deposits or automatic recurring deposits or reinvestment of dividends, you'll just slowly be building up more and more and more and more shares every month, which makes you more money from those dividends, because now you have more shares, which means you get paid a bigger dividend. And that snowball rolls. That's why I like it as a piece to the puzzle. But that's an example. That's just kind of like one of those ETFs, kind of like SPY. It's not necessarily like SPY in terms of the price action of the stocks that are in it and the weightings. They're different and the objectives are a little different, but it kind of covers the same general basis in the idea. So that is that. Way I plan on playing it instead of a swing trade once we break out some zero day SPY calls. Risk 2% of the account on each trade. Either go worthless or a prince. If you catch one of those that goes like 10,000 or like 2,000%, that would be nuts. 25 to 30 delta on those. Risa, it's been a while. Hope everyone is doing well. Great to see you again, Thomas and Flippa. Hope you're doing well as well, man. I mean, I'm really happy to have these streams going, and I think we've all been having a good time the past couple of weeks, and hopefully it's been choppy. It's been, it's been up and down. I think all of us guys and gals, I want to say that my demographic is like 90-ish, probably % male, but who knows what the exact numbers are. I could probably look it up if I really wanted to, but I haven't looked that stuff. I don't honestly care too much. But yeah, I think that sometimes, like, what is the percentage of male to female viewers or just whatever? In the stock market, it's generally skewed because you have it just kind of is like mostly male, right? That seems to be more interested in the financial side of things and stocks and stuff, although I don't really see why that has to be the case, right? Yeah, so here's a level like this is the 10-year, by the way. This is the 10-year yield. So we hit this level back in June, mid-June, 3.5-ish. And we're kind of like hovering around that. Kind of, you can draw that level and, connect a bunch of these. That's why I thought it was a valid trend line to put in. So I'm not surprised that the 10-year is up 4% today. It's because that's what it's up 4% today. But what I'm more so surprised, let me adjust this so you can see this a little bit better. Is that, there you go. There you go. But I'm more surprised. I would be more surprised if this gets up into this area. If it gets up into here and builds above that, I would be very, very surprised. However, who knows? Who knows what happens? The thing is, I think you can see this next, like, we're in this limbo of like, now that the Fed has kind of come out and Powell has pretty much said that they're, pretty much close to the end, if not already there on rates, right? In terms of hikes. The shift, if this bank concern, crisis, I don't really, mini crisis, whatever you want to call it, if that concern subsides, you'll see the 10-year, because the 10-year was up here before the bank situations. Like, the 10-year will come back. The thing is, I don't know if it gets back above 4. And of course, I think you're looking at the next CPI that would be, pretty telling on that next direction of that. So we'll see. And that's the next look. Next Fed meeting is out May. I think it's like May 2nd. It's in like 36 days. It's May 3rd. Current projections have us at a 57% chance of a pause and a 42% chance of a 25 basis point rate hike. That's where we're at. Resale, yeah, you got a female here. Yeah, it's funny because I feel like, we were saying, like, I think that the numbers are probably mostly skewed to be mostly male, but hey, we appreciate everybody hopping in, and everyone provides good insight, and I think that there needs to be more females that, that hop into the streams. I feel like we don't necessarily, there's no reason to, we're not in here doing like, wild things that maybe would, I guess, shoo them away. Like, I'm just doing our normal thing, right? I got no reason, I feel like. I think just the general space is mostly dominated by male interests. And so, like, you probably have a pool of, let's say you had 100 people consuming stock market or whatever type of content or interested in that type of stuff. You're probably looking at like 75% are probably male. It's just what the numbers are. But I think it's been changed. That number's probably come back. It was probably more. Now I think it's getting back towards closer to 50-50. I don't know if it'll get there anytime soon, but we'll see. Happy to have you nonetheless. Either way, let's see. So stock price strength. Look at breadth. Look at breadth. Stock price breadth. Like these are some indicators. We haven't gotten, breadth got pretty nasty. Now, I think this is just because what happened was you had this, like, the past couple of weeks, even with the bank crisis, I think you had a lot of people who just said, you know what? These small companies, like, that's why, like, a lot of small caps did not do very well. If you go to, like, IWM and IWC IWC is the micro cap ETF. That hit a new low. That hit a new bear market low. IWC, yeah, look at that. Just like literally on Friday, down at under $100. Hadn't been under $100. IWC had not been under $100 since October of 2020. No, November of 2020. That's nuts. But it makes sense because a lot of people got scared of these smaller companies, smaller banks and whatever. And they're like, screw that. I'm going to put my money where the big dogs are. And that's why you saw like the Microsofts, the Apples, and like the Metas, like these big companies have done pretty good. And then there's Google's, like their stocks have done very, very well the past like 2-3 weeks. And I think as we've been seeing a clear shift out of the riskier stuff into more of the stable stuff. If these concerns subside, right, what that leaves us kind of thinking is like maybe there's like a nice opportunity, right, for a bounce back there. Problem is you're going against trend and you're trying to catch a bottom, but if you can catch it and we do see a big move back up and we see some sort of reversion to the mean, micro caps, some small caps, banks could be some good names, right, potentially, if that's the case. Not sitting here recommending them, right, saying buy them, they're fine, right? But if the scenario happens to play out, and of course it's always hindsight that we'll know, but then we go look back in 3 months and we're like, well, this kind of concern really kind of died down pretty fast and all those dips got bought back up and everything kind of came back to a mean. That's maybe what you're seeing right now, which is why IWM is super strong today. It's up 1.64%. Here's the 5-minute chart of IWM, right? Had a nice gap up from Friday, closing strong on Friday, had a nice gap up, came back, filled most of that gap, and then now is ripping back up. That's what you want to see for strength, right? If we had come back, filled this gap down and went like this, not a great look. But we pretty much just filled this gap of overnight action or pre-market action, whatever you want to call it, and then resume the trend to the upside. So backfilling, building prior resistance as support, higher lows, like that's what you want to see, right? So this is coming back and trying to get back over Thursday's highs. It's actually above that level right now on IWM. Power hour push. Kathy Wood's a female trader that people talk about buying SQ and coin. Yeah, Kathy Wood, I think Kathy Wood probably, to be honest, had a decent part in getting more females interested maybe in stocks because she kind of came on in the scene and she's taken a lot of shit right the past couple of years or as of late. Let's go look at her stuff. Let's pull up ARK, ARKK. Buying coin and coin's down today and SQ's up a lot today, I believe. We can look at those two stocks. Here's ARK Invest. Go back to those it really was December lows. I think this had a lot to do, to be honest. If you go back to ARK, like this had a lot to do, I think, with tax loss harvesting and just because of the year that so many of these stocks inside of ARK had for 2022, you had this period of just tax loss harvesting into December where people were like, hey, let me just kind of solidify my losses here, lock it in, I'll buy it back in 30 days, And that's potentially what happened. And that's why we saw that bigger move down in ARK. And I'm curious, something to always think about. It's a little strategy to have in mind, right? Towards the end of a year, as we get towards November, right? Time frame of any year after Halloween, just kind of in the mental or have your list of stuff. What sectors have been beaten down the most, if anything? Okay, if we've had a bad year or a choppy year, like let's just say that oil stocks are the worst performers this year. I don't know, right? It's only March, so who knows? But let's just say that the rest of the year, oil stocks don't do very well. Oil never rebounds, or we kind of see that gap fill back where like oil stocks were doing so well, kind of return back to the mean, and they're not the strongest stocks. into the end of the year, maybe those are the stocks that you want to look at on the downside for shorts, for maybe a swing trade or even for just like day trade weakness or hedges towards the end of the year, because there may be people who have taken big losses there and want to just lock in their losses before they buy back in 30 days. So kind of like a little mini strategy to think about for like the last like 2 months or so, mostly December, but you can start seeing that happen in November as well. So, I guess you can kind of say around Thanksgiving time into the end of the year, but you'd want to be there early. So you want to probably position yourself in early November in hedges or whatever you want to do. Going into that stuff. IWC and I don't look like they're in still a strong bear market. Yeah, they do. They don't look strong at all, They look like they are weak. SPY and QQQ offloads decently. Value type play. I think, when you have concerns like this whole these banking concerns, people are kind of get scared of. And I think it kind of bleeds over into stocks. Like it's this, what's happened? The small banks, the small regional banks are the ones where you're seeing people pulling money out of or just less deposit flow. And then people are putting money into the big ones. Bank of America, JP Morgan Chase, like people want the big names and they don't want to be in the small names. My dad literally works for a like small bank. And that's one of the biggest concerns, is that like, well, can we keep the deposits up? That's been a concern as it is before this whole stuff happened a couple weeks ago. And it's like, well, can we keep the other incentives we can provide to keep deposits up? People maybe have less money and whatnot, right? Savings are going down, credit card debt's going up. So can we get people to bring money in to our bank? And this is not helping them, right? So like that's a concern. And so that's what we're seeing. There could be some more fallout from this, from other smaller banks as well. It really comes down to what in terms of confidence of the consumer and confidence in the depositors, what do they got, right? So I don't think we're done on that front. The Fed can come out and say, hey, it's okay, calm down, we are okay for now. But are we done? I don't know. I don't know. Yeah, SQ and Coin. Let's take a look at those stocks. SQ, Block, formerly known as Square. Okay, I didn't realize it got crushed super hard with the short report. Was that the short? Yeah, it was a short report last week. Last week. So it got crushed pretty hard. And so now she's coming in and buying. This has got some room. If this wants to kind of bounce back, there's a big time gap to fill back up to about $72 or so, $72.50. If it gets over 60, it could be interesting to watch. I would be a little cautious though, but nonetheless, interesting. Coinbase, kind of a similar scenario here. Big gap to fill there as well. Coinbase over $70 and it starts to get into that gap. Still like, it's like $8-9 away. Still got to get there, but these charts are kind of wonky, especially some of these big time weak names from last year. Really wonky charts this past, 6 to 12 months. Pretty scary, but I'll be insured if some of Wells Fargo collapses. Yeah, Wells Fargo's another big one too. WFC, let's see how it's done. Yeah, obviously, not many banks are going to be doing well, right? But new lows, yeah. But it's bouncing back today. It's up 3.5%. So banks rise on SVB deal. So there's a little deal that went through this morning, I believe, or that officially was finalized. Let's see the top performers on the day. WISA. Yeah, First Citizens. This thing is up 55% on the buyout, I believe. I haven't checked it on the top gainers yet for today. BXRX, a little pump action right now. WISA is up 86%. Let's see why. What happened chart-wise? Oh, yeah. So a good example of a stock that, when it comes to a swing trade approach on a small cap, I like charts like this. The problem was there volume prior to this move today? Was there high volume? And could you tell? Yeah, you kind of could. Yeah. So if you go back and you get rid of today's action, today's volume, what do you see on WISA? I know it's kind of a little bit tough to see, but in the bottom of our screen, the volume. This thing it's up around $4, gets crushed, but high volume all the way through, and then it comes down under $2 and it builds a base, and then it gets pumped, probably news or whatever. But yeah, that's pretty crazy of a move. It's tough to play though. I will say it is not easy to play those. Like JAGX, JAGX. Where is this one at today? It's at 103, so it was up higher. But kind of the same idea on this thing, right? Timing the bottom is tough, but if you look at the let's go to the 1-day chart. Like, look at this volume. It's like not even close. Volume really starts to pour in these past month of trading. And so freaking from the lows, 73 all the way to 127, 130 almost. Maybe it's not done. Maybe it's not done. Old WISA, WISA. Yeah, we found that one a while ago too. Yeah, let me check. I actually haven't checked my small cap list in a long time. So let's see. Let's go through this list and let's just run through and check my list. This is like the old list that I haven't really updated in probably about a couple months, 2 months or so. I haven't really touched it. So NSPR, NVOS. I still like this one. I'm not in it, but I still kind of like it, to be honest. The volume's been pretty good. Just want to get it as low as possible and play it small. AYRO had that big move. It's just kind of just chopping around now. I don't know, nothing super nice. ACHL had a big move off the lows. Now it's coming back down. Maybe it builds a higher low here and tries to bounce around 80 cents. There's WISA. I mean, we were looking at it back here in late 2022 into early this year when it was coming down in this zone right here. I think they had a reverse split, so the price is different than what it was back then. But adjusted for the split now, price was around $8 or $9, and it popped to 22. It was over 100% move when it did break that downtrend. FNCH could be interesting. FNCH is one that's got a lot of volume as of late since this year began, but really hasn't made a big move. So that's a nice one to put on the radar to watch. NXTC, Bolt, decent volume, but maybe it's back down towards a good spot from risk reward standpoint. Not a bad spot on the long side from a pure risk reward. Meds is kind of curling up. Yeah, I'm freaking tired. I did 4 miles. I'm starting to train for a marathon for next February. And so the goal is to do it in a sub 10-minute pace average, the whole thing, which would be around 4 hours or so. I want to do under 4 hours ideally. But yeah, as someone who really I never ran long distance more than a mile or two. That was my cap. It's actually my whole life. And now I'm doing 4 or 5 milers and, building up. Ideally, I want to start doing getting into the 10 region soon just to kind of get the reps. But Texas heat, you probably want to do it in the morning. So it's been, as it gets warmer here, it's pretty draining. I'll tell you that. That's probably, I'm tired though today, but I did sleep pretty good last night, I think. Meds is curling up, so it doesn't look bad. METX, it's kind of weird. On some of these things, I just want them to get that dump and that flush into those lows before you'd start touching them. Grom is kind of interesting. Check this out. Look at Grom. Big move down, right? What's this? That's telling me someone's buying here. There's some buyer here because we got some big wicks. Means someone's probably slapping it, market buying or buying a lot of shares, and price is moving because it's a thinly traded stock. Today it's got some good volume. I would keep this one on a watch list, and maybe your risk level is 55 cents, But when you look at a 2-to-1 on these, you're probably looking at a 3-to-1 risk reward at least. 2-to-1 is okay, whatever. 2-to-1 is nothing. You're looking for more than that. So you'd probably be looking at something like this, a profile like this, And a 3-to-1 puts you at a target of like, yeah, I would say up towards $1 would make sense. This is around 95, 96 cents. So yeah, about a 3-to-1 risk reward from here would put you up towards $1 to make 3 versus to risk 1 down to those lows. It's worth a shot. It could be worth a shot if you look into them and they got something good going on in terms of cash and whatever. CFRX, maybe something there. And I don't know. LGMK. SECO. SECO looks like a daily bear flag is setting up. It looked good there. It had gotten crushed. So when I say daily bear flag, it means that really, I mean, there's no reason for me to be interested in buying this thing until this breaks, right, to the upside. And that would mean it gets back over 60 cents. But more likely than not, this is probably a lot of pressure on these lows around 55, 54. That's going to go, and it's going to probably drop a couple cents in the process. Wouldn't surprise me. So just watch that one if it's on the radar. ONCS, it looks a little better, but had a pump from the lows. DCFC, undercut the lows and bounce a little bit. IMRX, that's a big mover. IMRX has made a massive move off of it. It's essentially a double bottom right here. It double bottomed at around 370. Big move back to 10. Killer. That's a killer. That's a beast. Jeez, man, that would have been a monster had you had taken that, like 200%. ZENV had some volume a few weeks ago. Now it's kind of just went to new lows and is chilling there. IPSC had volume as well, but then it kind of cracked down. These are interesting ones. And then JAGX. Better volume on JAGX, JAGX, but I don't know. I just don't really have the vibes are just not there. I just feel like right now for small caps. So you got to look at these, and your best play today is WISA. It's up, 90 to 100%. It's pretty good. Don't get me wrong, but I don't know. I just don't think we're seeing like the crazy moves right in small cap land that maybe we've seen in the past to get me super excited to start buying those things down towards the lows, right? Unless you got a really good feel on fundamentals or whatever. Day traded JAGX today, first 61. Hey, nice. Favorite pumper and dumper. Now on ASAP, delisted off the NASDAQ. It's on the OTCs. That's hilarious. Learn about JAGX from your channel. Hey, I think that's like the biggest thing to take away, and everyone kind of gets these everyone gets super, I don't know, weird about this stuff. When it comes down to it, the way that I kind of view this whole thing and everything, it doesn't matter. Who cares about where or who called this? I'm never gonna sit here and be like, oh yeah, look at that call, it was incredible. Yeah, it sucks. If you didn't take advantage of it, you're an idiot. No, there's a lot of people who have this I don't know, this crazy confidence to the point where it's degrading to a lot of people who watch them, who, didn't take action or didn't follow them. And of course, the people who do that type of stuff have probably 1,000 bags or probably 1,000 losses that they're just so, whatever, so ashamed of sharing that they won't do it and they won't talk about. But that's where people make the most, in terms of a learning process. Because it's how did you come out of that? What did you do wrong? And then stuff. What I'm getting at is the whole point of if you take something away, just from me or from anybody else, the whole point is to take something away. Maybe you learn about, this stock, and then it's on your radar, and now you can take advantage of it one day and you just crush it one day. Or you learned about some strategy, or you learn about, let's say, a long-term investment, strategy, or you learn about, selling covered calls and or a way to do this or a way to do that. And that just kind of, helps you out in some way. That's what it's all about. It's not about, buy this and, it's going to go up and you're going to make money. That's not helpful, right? Because there will be times, or there'll be a period when you're on your own, or just like anybody else, you're on your own and you want to be self-sufficient and you want to do your own thing. And, it's more about the skills that you learn and the things you've kind of taken away over the years, little things that, you picked up on versus following somebody or waiting for someone to tell you what to do, right? That's my thoughts on the whole, financial space. YouTube, Twitter, all that stuff. If you can do 11 miles, you can do a marathon. Yeah, I mean, I'm working up to it. Maybe I'll do a half like this summer. My sister wants to do it. She's a big runner. She's done cross country and stuff like that. So over the years in high school and everything. So maybe I'll do a half. It'll be kind of it honestly would be a good warm up to do a half like this summer at some point. Wouldn't be too taxing, I wouldn't imagine. And then, be good practice to get ready for the full thing. First marathon, I did 8:26. I did 4:09. Yeah, I mean, I'm hoping to try to do it around that, 4-ish. It'll be cool. And I'll be 25 when I do it because I'm planning to do it in the Austin Marathon in February next year. So I'll be 25 at the time. So we'll see. And then I would love to kind of do it, maybe not every year, but every couple years, and just kind of see if I can improve it. If I really want to do it, great. I've always been more into lifting weights over the years. And so I kind of tossed cardio aside and was like, eh. But now I think that, from a longevity perspective and just honestly, just for a new challenge to change things up, right? Because things can get kind of boring, to add that in. And so now it's more like I lift 4 days a week generally, and I run 3 days a week. Of course, I say that, and there'll be times where I take off and whatever, right? But if I'm a perfect week, feeling good, sleeping well, right? That's like the general gist. So I used to be more like the lift 6 days a week. It just got too much, and you can only make so much progress, and you're doing the same thing a million times. Which I do enjoy. Don't get me wrong, I do enjoy it, and you can change the workouts up and stuff. But I think the adding in running is kind of fun. Thoughts on TMF, MRO? We'll look at those too. So TMF is again, it's the 3x of TLT. So here's TMF's chart. Needs to get over this like $9, really $10. TLT is at 104. So TLT pulled back. The charts look very, very similar. TLT needs to go over 110. The way that I view these is like, yes, are you getting kind of burnt a little bit by the decay factor of the 3x ETF? Sure. But you can sell covered calls to hedge that a little bit. The overall view on this is pretty simple. I don't think we're going to go below here. It could happen, right? Could happen. Just don't think we're going to get there. If we do go below like $100 on TLT, which would probably put us down into like the sub 7s on TMF, I'd imagine. Let's see. Yeah, around into the 7s on TMF. What that would mean is the banking crisis is avoided, right? That's like what the market believes. Banking crisis avoided. Inflation's still too high. Fed's going to get right back on track and start hiking rates again. That's what that means. Do I believe that's necessarily the case? Like, not really. Could happen, sure. And I'm not open to the idea of that being the case, of us getting back that way. What you'd want to see is, now, if this banking crisis is kind of almost averted or whatever, Fed's kind of feeling like, make people feel that it's okay. What you'd want to then see is us now see inflation come down over the coming months pretty nicely. And if that's the case, we're going to see the bond market react, and we'll see that bonds, TMF, TLT, they'll go up, yields will come down. How much and how bad? I don't know. I think the general idea is that we're probably, at the end. The question then becomes, right, I think, is more of the recessionary fear. So if we do end up into a bad recession, what's going to happen here? This. Because the Fed's going to have to then cut rates to stimulate the economy. If this is the case, if we are up in here, if this scenario happens to some degree, it doesn't have to be that high. It could be higher, it could be lower, right? Probably not going to be great for the market. Probably not. Could we do something up into here? Maybe, and be fine. But the higher it goes and the more aggressive it goes, that probably is a sign that there's something wrong in the economy, and it's probably not good. So you want to see us make that move slow from like this. You want to kind of see us, eventually kind of get up there for the market to kind of be okay in the time. An aggressive move would not be good, because It would be good for the position, don't get me wrong, but it would probably be bad for the overall stock market, as there's probably a problem and the Fed's cutting rates for a reason, not just because, hey, we want to cut rates. Like, they're cutting rates for a reason, not just because it's fine. Unemployment's going up, or other areas of the economy are getting hit pretty hard, and there's other concerns, problems. But as we just saw with this whole bank kind of situation, you saw how quick the 10-year dumped. You saw how fast bond yields moved. You saw how fast TLT that was sitting down, or I'll go look at TLT's chart. TLT that was down under $100 goes from $100 back to 110 almost in a matter of like a week or two. It can happen pretty fast, and all it takes is for there to be something that cracks, something that breaks, some concerns that pop up, and then boom, next thing you know, we're off to the races on bonds and yields are plummeting. So that's kind of why I have that as a hedge almost. It's like the recession hedge. Do I think that the general trajectory, right, is probably going to be down in yields over the next like 6 to 12 months? Sure. Without a recession? Sure. As the bond market prices in potential cuts over time. The problem is how bad, if we have a bad recession, not a problem. The other idea is like the secondary piece is bad recession if the Fed over tightened. Maybe they didn't, but if they did and something breaks, bonds are where you're going to want to be, because they're going to have to drop rates eventually to stimulate us back to get us out of whatever problems they've caused. That's still long away. It's not now, but the bond market, you'd want to be early to that. You'd want to get in my opinion, you'd want to be positioned there before it happens. This way you're not chasing it or any of that stuff. That's kind of like a long-winded answer on TLT and TMF. MRO, nice day today because oil's up a lot, but it broke down. I wouldn't want to see it back above here, above 25 really. But it could get there if oil really gets going again. Who knows? But I have puts on this guy out to 2024 as kind of like my hedge almost. It's the way that I'm hedging the port. So we'll see. Tried to catch the bottom of CODX last week at 150, but got taken out when it broke down. Let's see, CODX. Yeah. But that's going to be, it could be a nice one. I remember CODX was a beast back in the COVID days. It was a killer. I remember this stock, if I'm not mistaken. I remember looking at it or trading it prior to COVID. So like back in the summer to fall of 19 when I like was getting into it. And like I had these spikes and it was nuts. And I remember back during COVID, I was looking at it and, from under $1, I remember when it went to 20, I was like, oh my gosh, insane. But yeah, now it's back into, it's back into this range. It's pretty crazy. It filled the gap, I guess, this gap from back from early COVID times. Finally. Good insight from John. Yeah, I think I don't want to like try to complicate it too much. I just look at the TMF play as like, it's kind of a way to say, let's stop thinking about the stock market and kind of think about this logically from a macro kind of cycle perspective from the Fed. Like, could we be in a cycle where we end up raising rates just like slowly but surely for a long time and inflation never goes away? Yeah, that would be a scenario in where the banks are all fine. Everything is fine. We never have unemployment get going. And the Fed could just kind of like ease into rates in the economy. That would be a situation where the economy is like super, super strong and whatever. The other problem with that is like the amount of debt that we have as a country. Is that sustainable? You look at that and you say, it's not sustainable. I just don't think that's sustainable to have rates that high, right? It becomes extremely difficult to pay the debts, right? So like, there's a lot of concerns and problems. Should it be like, could that be the case? Like, yeah, but when you think about it from like a cycle or macro economy perspective, like, yeah, something doesn't seem too right there. And like, my guess would be rates come down, and then if there's a bad recession or whatever, and rates come down, the Fed stimulates back, what's going to happen again? Well, we may have inflation in 2 years. Bad inflation, depending upon how much they got, how much money they print, whatever, all that stuff. Depending upon those things, how much they cut rates, we could be back into like boom town, right? Everyone's doing good, and then have massive inflation in 2-3 years, right? And then now we're back to square one where we just were. It's not about back to square one. It's more so we're just back to the same cycle, and now we have the framework to kind of play off of a bit better because we've had this cycle play out, just recently, if that were to be the case. And I kind of can see, like, I think about from a macro view. A lot of times I like sit back and think about it, and I'm like, what we're kind of getting at right now is we're in this period where it's like almost training you from a big picture market perspective to kind of buy the dip, because where's the crash? Like, we never really had a crash. Like, we had some pretty nasty weeks or months where we had some big drawdowns, but we never like had that like absolute capitulation crash. Like the VIX goes crazy, the market's in, limit down territory. It doesn't have to go to limit down, but the market's still down 3, 4, 5%, like 3 days in a row, boom, boom, boom. And now it's like panic. Everyone's like screaming, going crazy. Like we kind of had like little bits and pieces of that back last year, like a little bit, but it wasn't like that bad. And now it's kind of like, well, if you didn't buy those dips, if you're not buying the dips now, you're kind of getting left behind from like an overall market perspective. So I kind of have this like weird, I think back, like, of course, you always think about just like potential outcomes and who knows what's going to happen. But you think from like a psychology perspective, it's almost like people are getting trained now to like think, fuck, I got to buy the dip. Right? Because like people are like, no, I'm not buying the dip. We're going to go lower. And like, what if we don't go lower? We're just not going lower. Right? So it's like, we're not getting that capitulation flush. We're not getting that crash. We might get it. But for right now, it's almost training people. Look at how tech is, look at how Apple's doing, Meta, look at how Netflix did, Tesla bouncing back, Nvidia like look at these, some of these stocks have done insane. Here's Nvidia's chart. Like people were like, no, I'm not buying Nvidia when it was down at 110, right? And now they're like, no, definitely not. But you missed like 100% move, right? So it's like this training of almost like, oh my gosh, you should buy the dip. That could be setting us up for when we all of a sudden are in the next leg down, whether that means Nvidia is going to go here before here, or it's coming sooner and we start to do this, right? It's going to set people up to want to buy these dips, right? Which could then help send us down further and give us that true capitulation and that true free fall that we never really got this past year. Do we have to get that? No. But it's kind of like this thing in the back of my head that I'm just kind of like thinking about, like, man, that would be something, right? To kind of like never give people what they really want on the bear side this cycle or this, past year. Kind of string them along, get them to go back in. Maybe the market rips for a little bit before a next leg down. And then, oh my gosh, could that be a setup for killing people for buying the dip? Which they got rewarded for, at least it looks like now, individual stocks and whatever, maybe the market too. If you're buying SPY under 400, like you're probably doing decent. Like, SPY is like getting back to that level now. It was above there a couple times. If you bought in the 370s and 360s or even 380s, you're up, on SPY. So, and if you're just dollar cost averaging, getting paid dividends, like you're doing good. Like you're like, oh, hey, this bear market, yeah, it's cool. I can handle this, That's kind of like the psychology at play now. Maybe that's going to turn at some point, right? I don't know when. Is it going to be in a month? Is it going to be in 6? Is it going to be in 12? Does it never happen? That's the whole fun of the stock market, whether you think it's fun or not. Maybe it's a sick way of finding enjoyment, almost. VIX back down on the 50-day. Let's look at the VIX. Yeah, VIX is going, we're getting close to a sub 20. VIX sub 20, I will exit so we got another dollar to go. I will exit my SVIX, which is my short VIX position. We'll probably be up like, I don't know. On that thing, I'll probably be up like 20-ish%, something like that. The swings that I had on Meta and Microsoft, they still expire next week. They're not doing well today. As we're seeing tech being weak, tech's being the weaker kind of link, and we're seeing other sectors doing well. Microsoft is, I would like to see it hold 275. I'm going to give it, this week. I'm going to either exit them. I'm going to exit them this week, most likely. So it's got to kind of get either break down here or I'm out, or break out. It's still right there, so no reason to jump ship. Meta's looking a little worse. Technically speaking, it was a bit tighter. Although, right, I look at this chart from a big picture perspective, and I'm like, I mean, what could tomorrow bring? Why get out now when tomorrow could be one of these like big days, break out, and we're there. The contracts go 300%. So they're out the money contracts that I bought on Friday because of how strong we looked on Friday's close, and I'll hold them. They're down like 50% today, which is unfortunate, but that's kind of how it goes when you buy out the money contracts and we have a red day. Not unexpected, but that's the update on those. Oh, the other swing that I had is XLP. That one's doing well. Check it out. Look at XLP. Here's the breakout. Nice update. It's up about 0.5% today. It was up a little more. It's giving back about 30 cents of the move. I'm looking for a target of $75. This is the consumer staples ETF. Just broke the downtrend on the daily and the weekly charts, and that was that. Nvidia's head up for a pullback at some point. Yeah, you would think. It's funny though. I mean, a lot of people are trying to nail that, and they want to nail that right now. I've been seeing. I mean, yeah, we should totally get one. I could think down towards the 240s would make a lot of sense into here. But who knows? Maybe it doesn't want to give us a pullback and wants to just keep going. Nat gas going to 2. Nat gas, dude. Oh. The chart doesn't look good. There she is. Dipped down to 217-ish today, 218. But it does not look good, I'll tell you that. Oil's up 3 or up 5. Nat gas is down 3 today. Maybe tomorrow, Wednesday, we get a breakout on SPY. Let's go back to that SPY chart. 397. Yeah, we got to get to that 400-ish. Just shy of 400 should give us a pop. And then you start pressuring. You get above 400, which it's not that far away. It's $3. You start pressuring this upper wick that we had during the FOMC meeting. And I think then you'd be off to the... I would probably suspect you'd be off to the races. Is there a pullback? Is it a little bit of consolidation chop before then? Sure, maybe. But if you start to get up into this area, over 400... I can see us accelerating to the upside. And I think 410 is probably the next spot to look for a target on SPY. That would be my guess. Today I had Apple and I had AMD trades. I think it was 2 red, 1 green. Ended up small red on the day. So it wasn't really to be honest, it wasn't a day that I was feeling super good about from any perspective. Apple was looking for this flag here. Once it got above this VWAP, set it up, and it kind of got going. It needed to break this 1675, couldn't do it, and ended up getting stopped out as it fell back down under these lows right in here. Good thing I did because, hey, ended up getting not crushed, but ended up dying on us. But Apple's in this kind of consolidation here where it's just holding these higher, like these lows are up around the upper 150s. And that is a key spot on the daily chart, right? Was resistance multiple times, and now it's holding as support. So it still looks constructive for the upside. I could see Apple have a day where it pops to like 163, 165 in one shot, pretty easily, as long as it holds like 157. And then AMD, I had 2 trades on it today. The first one was when we broke down underneath the lows of Friday. I got stopped out as it came back up. Looking back, that VWAP ended up holding, and then they ended up playing it again on this little like flag setup right here. I played it in here, and it ended up making a nice chunk of change back. Ended up actually going green on AMD. So the first loss was a small loss. The second win ended up being more than the loss was, so made money back there, and then just really left on the Apple small red. But Nothing like I wasn't like, oh, sizing in big or anything. I was like, not really liking it too much. Some small short-term little plays, but I mean, this is kind of like the thing. Like you had this, like you look at the hourly chart and you go back to AMD's last week and you say, okay, it was a pretty key spot on the hourly, but we bounced there nicely. What do? We broke below that. We bounced back up, stop you out, and then ultimately ended up going down through. It's kind of how it's been. You know, it's like just doesn't want to give us that true flush and die. Also doesn't want to give us like a true rip. So we're in this little limbo. Canvas stocks hitting new bottom may be a good swing opportunity. Tilray. Pull up Tilray's chart. Tilray hit those lows. 225-ish. Now it's back 260s. MSOS is the ETF. Yeah, it's the ETF. Yeah, it doesn't look good. I mean, it doesn't look great, although, right, provides opportunity at some point. Yeah, it's crazy to think. Well, I mean, it was pretty nice. If you look at this, right, kind of broke this little consolidation. It broke down. So if this catches a dip, if this buyers comes in and gets back above 630, that's a long. And then your risk is here for a swing idea. I think so. But buyers got to step in to get me interested. Haven't forgot about YOLO one day, kind of a group again. I mean, hey, it's kind of crazy one day. One day. It's kind of funny too, because I mean, I look back on this chart too, and I think to myself, the last time I had edibles was like literally right in here. And it's been down ever since. It was like mid-December. It's the last time I had an edible, and now we've gotten destroyed. Maybe I need to come back into the market. Not that I have any effect on these cannabis companies because I'm in Texas, but you can get Delta 8 or whatever, which to be honest, man, does a pretty similar thing to somebody who's not a very active cannabis user at all, right? It's a little bit of D8 and I'm rocked. So here's SPY. Let's see, kind of a similar chart to Friday, right? Just kind of higher lows building. See if we can catch that. Yeah. So you'd look at this and say, hey, if it's the same idea, I only got 15 minutes left into the close, but this would be the dip buy. And you look to go long now and stop loss below 396.80 for ideally a 2-to-1 risk reward. In a perfect world, at least get 1-to-1. 420 coming soon. SPY needs to get back to 420 before. But then again, actually, that's true. You know what? That's a good idea. That's a good idea. That's a good idea. Did that affect it last year, though? Let's see. Did these stocks get any pop off of April 20th? Did they? No. No, I mean, April 19th was a green day, but it didn't move, which is kind of unfortunate. You'd think that'd be kind of cool if they did. Tilray did get some buyers in anticipation of it into like late March into early April, but then it sold off. Maybe there are some other news associated with that. We want to double check that. Yeah. Here in Cali, I love weed, trust me. I think it's, I enjoy it. Well, I don't really drink, so I mean, if I had to pick one or the other, it would be weed, but I also don't smoke either. I'd just be edibles. Fun fact, I've never smoked in my entire life. Fun fact. 24, almost 25. But never done it. Never, not even an attempt. Nope. Haven't. I was like that with alcohol I won't say I was like that with alcohol, but I kind of was like that with alcohol for a while. Even into college, I was never really interested in drinking. Then I started drinking a little bit and was like, I don't really care for it too much. And that's kind of the same deal now. It's like never, I will even say this, I've never been blackout drunk, never, drunk to the point where like I can't function. Like I've never gotten to that point. I want to come and say it's from a health perspective. I've always been very like health conscious, but I don't really know if it's necessarily that. Just really wasn't like super interested. I feel like whenever I drink beer, gas. I just can't get over it. It's like I haven't had a beer in I don't know how long. I can have like ciders, a cider or two, but that's it. Yeah, I just can't do beer. Can't have something feel like crap. How kratom feels to me is how weed is advertised. Interesting. I never tried kratom. But yeah, cannabis, when it comes to weed, the thing is like I've seen a lot of research about it and how it's like really bad for your sleep and stuff. And so and even alcohol too. So if you're going to do those things, right? Drink, or you're going to smoke, or, take edibles, they technically recommend that you do it. It's almost like a caffeine effect, not caffeine, but like they might make you sleepy or make you tired at night, but like it's actually, apparently it's not good for your like deep sleep and like your recovery of sleep, for whatever that's worth. So they say that if you're going to do it like, 5 to 10 hours before you go to bed. So it's like, okay, who's waking up at 9 a.m. and just ripping a bong? Like no one's doing. I guess people are, but most people do it like at night. You do it after the day's over, home from work, school, whatever, or you're hanging out on a Saturday night and it's 10:30, 11 o'clock and you're with your friends and you're, whatever. Like, and same with drinking. Like you're not going to start drinking at 9 a.m. So like it's kind of backwards, I feel like, on how these things are used, when maybe they would be a little better health for you, better health wise, if they were done earlier. I don't know. I was looking at some stuff and that's what I came across, but what do I know? Never used and smoked nicotine. Yeah, I've never done that either. 12 to 22. Geez, from 12 to 22, man. Got really sick. And I think that's kind of what ends up getting you, right? In a lot of things, right? You kind of do something until you really kind of hit this wall, or you hit something that's like, no, like I got to stop because this, and this, or because this happened, or, you need that wake up call a lot of times. Alcohol messes with my sleep anymore. I wake up super early. Yeah, I mean, I feel like what I've noticed from edibles and stuff, I will be the like, just I will sink into the couch. I guess it depends what strains and stuff you have. I will sink into the couch and like I am done. Like if I have enough and I'm tired a little bit, I'm done. Like you are not. You can't even get me off the couch to go to bed. I'll fall asleep on the couch. High school, I used to smoke nicotine. Jeez, I feel like my high school, and there wasn't a lot of that. There really wasn't. It was more so just like the drinking culture. There wasn't really a lot of that smoking culture, even weed and stuff. It was not that prominent. It was more so just drinking and alcohol back in high school. I also have I have family, a lot of family who smoked, for many, many years of their lives and had many problems. And so I think it kind of just like turned me off from a kid. I guess it could flip you into doing it, but it kind of turned me off as a kid. By the way, SPY just broke down that trend line. And so we're getting a little sell off into the close. The trend up is breaking. Microsoft, check out some of these charts. Microsoft's holding up okay. Meta, At least they're off the lows. If they were going down to new lows into close, that would be not the best. But all I'm just saying, California, we all love weed. That's all I'm gonna say. I honestly, when it comes down to if you had to pick between the two, I 100% would be all for weed and cannabis instead of alcohol. We joke about like opening up a place here. Of course, it's Texas, so you can't do it, but opening up almost like a hookah lounge, but except just for weed, and like have like a bunch of food trucks. Cause like Austin's like a big food truck place. Like a lot of places will be like a bar or like, like a, whatever, I guess like more like a bar kind of, and they'll have like food trucks around. And so you go and like, you'll get food from the food truck and you hang out at the bar or whatever. You'll eat, drink, tables everywhere. Like, we're like, what if we did this and applied it? But we're like, we did it with weed. And everyone comes in, like, wouldn't it make sense to have like some crazy good food trucks, like tons of them, and then you're like essentially like a weed lounge, edibles, right? You can smoke, they got whatever, right? There, you got everything. Like that would be, you would think that would make a lot of money. Yeah, I'm sure people have done that to some degree, but it's my business idea. If anyone wants to steal it, you can be my guest, I guess. I don't think I'm going to go and actually implement it, but we joke about it sometimes. High school, we'd smoke all the time. We were skateboarders, so we're the kind of like the outcasts. I can see that. Both of you guys were in the skater outcast group. I was in like the recession-proof business. That's funny. I was in more of like I played a lot of sports, but I was never like starting kind of like level varsity sports. I played freshman JV lacrosse, and then I did like track, but I was never like top. So I was kind of like second tier, like sport group, which was like not enough to be cool to fit in with like the super popular sport kids, athlete, jock kind of crowd. But I was like just under that. But then that kind of puts you in this weird place. It's like in between like a bunch of different groups. You kind of like almost want to be them, but you don't want to be them, and then you don't want to be the outcast almost. Like you're kind of like, I was like in between, like I would say. It's kind of a weird experience, but we all survived, I guess. Didn't really find like a core group of friends, I would say, until like late high school, and then we had like a lot of fun once we found like a core group of friends. But prior to that, it was kind of like weird. So I got silver and gold. Silver today, it's down, not much though. Here's the daily chart on it, not too bad. SPY's trying to come back after breaking that trend, right? What did SPY do? Well, this is kind of the story of today. Save your money for another day, almost is the way I look at it. Broke the trend. Did he give you a total flush where like it gave you a nice trend down? Nope. What it do? Immediately gets bought back up and gets you right back to the trend. Could it reject here? Sure. There's only 5 minutes to go until the end of the day. So, not sure I really care to touch that. But still, I mean, everything is still holding decent. Sectors to watch, though, will be energy to see how oil continues. Here's XLE. Curious how this is going to continue on, if it's going to bounce further. XLP, consumer staples, strong day to day. It was open stronger, and then it kind of fell off a bit. Here's the chart. But to be honest, what it really did was it just kind of consolidated here in this range all day. So not much to talk about there, I kind of figure. And then, let's see. XLF also bouncing up a little bit off of where it was last week. The financial, we'll have to watch that one closely into the coming days, because it's borderline setting up for the next leg down, because it is right in line. XLF is right in line with a lot of these lows that we saw over the past 6 to 12 months. So this breaks, you've probably got your next leg down. But if it holds, we might have some nice ground to cover back to the upside here over the coming weeks. on XLF, financial sector. Saving my money for the day. We keep selling. I'm gonna even trade. Yeah, I think sometimes, man, it's like you just gotta kind of just wait for the better day, wait for the better opportunity. And that's kind of how I feel. In terms of economic news, not much today. Well, there isn't much until Fed governor speaks later on, but okay, who cares? Tomorrow we got some stuff in the morning. Not a ton. Got some stuff in the morning. Then I think the big day is Friday in terms of PCE, personal income, PCE numbers on Friday morning, but we got a long way to go until we get to Friday, right? Long way to go. KRE will be nice when that comes up. KRE. Yeah. Regional banking ETF. Will be fun to watch. This guy, I mean, obviously got destroyed, right? Yet we think about this and say, this thing were to come back, if these lows are in, right? Let's say the lows are in. Of course, they may not be, but if they are, 2-to-1. What's that? Yeah, it's 3-to. You can get even a 4-to-1 or even more than that, almost 4.5-to-1 risk reward from here back up to the lows we saw prior to the bank collapse or concerns or whatever you want to call this situation. Because it's not 2008, not even close to that scenario. And it's just kind of like, could we get there? Maybe. If there are bigger problems, but we're like kind of this like weird, like it's not that bad, but it's also not good, but it's also like, how do we kind of digest this? And we're kind of still in that process, I feel like. Been talking to some other SPY traders on TradingView. Oh, cool. Yeah, you know what? There's another factor from TradingView that people don't realize. Like, there's a ton on TradingView in terms of the community aspects, like the posts you can make. I've never even like made a post on it, but like honestly, you should, because like people grow like pretty big followings or whatever on just TradingView, like charts and stuff. So that's why I love the platform. It's super easy to be almost like an affiliate for them, right? Which is essentially like when people use my links, like, I get credited just like anybody else could get credited. But it's like, it's one of those things where it's like, it's not a scam. It's not like I'm literally paying for the yearly membership anyway, hundreds of dollars a year. So I'm not like, they don't even give it to me for free or anything. I mean, I'll stand behind them and like, yeah, totally, totally. I totally would support that and be happy to promote that because I use it every day as well. So SPY gave us some of that back into the close. It ended up. Where'd she go? Yeah, so it ended up actually breaking down nicely there. Stand behind them as well. Yeah, they're solid. I wonder if anyone will try to come at them in terms of there are similar platforms, or at least somewhat. But I think the end game is for them would be essentially get every broker every mainstream broker on your platform so that you could just log into your like Webull account or log into your Fidelity account and then execute trades on TradingView through your Fidelity. Kind of like how I do on Tradeovate, and you can do that on Interactive Brokers, on a bunch of other brokers, right? But I would think that would be like the next step for them, right? To grow even further. And they already integrate into a lot of other platforms. But even integrating into like, to be honest, like you look at like a Fidelity and like some of these older brokers that have been around for a while, Charles Schwab, like I'm curious if like because like some of these things, like you guys are they're not going to be able to come up and match the quality of trading. Like Webull comes out and has their stuff and it's like, okay, it's pretty good and whatever. TD Ameritrade, like pretty good, right? People use those platforms a lot. And of course, if you trade options, you can only do that on those platforms right now. But like, I just find it hard to believe that, you can be like a Fidelity can build. They have the active trader though. I'm not sure. Like some of these older school brokers can come out with a product, that even Interactive Brokers, which is a pretty big name in the brokerage space. Like their charts, their trading like interface is just so old. Like it just looks old. It's not like a trading view, which is why if I use Interactive Brokers, I would use them through TradingView, like Interactive Brokers, a lot of positives. There's a lot of great things, right? When it comes to fees, especially if you don't live in the US, it's one of the better platforms out there in terms of fees. In the US, you got a lot of free brokers. Like how could you beat a Webull? How could you beat TD Ameritrade? For the most part, those are like the two top platforms right now, I think. How do you beat those if you're like an active trader? It's tough to beat. But if you're not in the US and you got commissions, other things, and you have to use like Interactive Brokers or other brokers, that's a good broker. But maybe you're like, but it just doesn't look like, TD, or it just doesn't look like Webull from like the user interface and, execution of trades. So that's why it's great to connect it. So that's where I think that some good partnerships can be built with a lot of these brokers and TradingView over time. So that the growth is still certainly there, I think. If they integrate Robinhood. Still feel bad promoting the good stuff. A lot of people, the whole FTX stuff backfired on a lot of guys. A lot of those guys are getting sued, those big YouTubers that promoted FTX, like the Meet Kevins and Andre Jick, I think, and I'm pretty sure Graham Stephan, like all those guys. There's other ones out there too, but a lot of those guys are getting sued. I'm not sure if they'll actually lose or whatever in case. Because here's the thing: if you promote, like my whole thing about that, like I think I don't want to say it's funny for those guys. Like they make so much money, who fucking cares? I don't think it's a big deal, but. And who lost, right, out of that scenario? Their followers. Because their followers, from a percentage of amount of income to how much money they would put on FTX that they lost versus how much money you probably had on FTX, like compared to your income, you'll just make it back or whatever. Like it doesn't really matter. The scale is not even close. So like 100K to some of these guys that they may have lost in like FTX. I have no idea. I'm just speaking out of my ass. I'm just like saying out of hypothetical. They lost $100,000 in FTX because they had $100,000 in FTX, their account, and they lost it. Big whoop. They'll make $100,000 next week or today, for all we know, off of sponsors and ad revenue, whatever, right? Or course sales. You know what I mean? You just make a post about, you make a video and you advertise a course and you make $100,000, right? For some of these guys with huge followings. So, it's like, but then it's the guy who has been, like big into crypto. It's like, hey, this is the next best thing. And FTX, all right, I'll put all my money in FTX and I'll just put it all into Bitcoin and Ethereum and this and that. And I'll just have a nice portfolio. That gets wiped. Could they have been smarter and had other ways to hold it? Yes, I'm sure. If you were really that big into crypto, you probably wouldn't have had all your money in FTX, let's be honest. But still, same thing, right? From a percentage amount of dollar, from a percentage approach of income or net worth. Who got fucked? It's the guys who signed up with your link and put money in the account. They lost more money than you percentage wise, based on their net worth. But we'll see how that ends up shaking out. But my whole point was, to be honest with the whole stuff, like, whether you like the guys or not who promoted and you think that they're, scam artists and whatever, they don't freaking know. The company's lying to their face too. So it's like the company reaches out, you do your due diligence, and you're like, okay, like, just like anything else, they're going to pay me to talk about them. And, I'm using their platform for a couple weeks and it looks pretty good. And I've been having a good experience and I've done my research and nothing that I can see off the bat looks sketch. Okay, let's go ahead, right? That's a concern. It's a problem and more research needs to be done, sure. But at the same time, it's like, You know, we kind of all got fucked and everyone got screwed and they were scamming everyone. So they scammed everyone. They scammed me. They scammed you. They scammed, you know, for everyone. I wasn't really, I would never made an account, was never involved. But I don't know. To some point, you know, how much responsibility do these guys have and how much due diligence could they have done enough work to figure out FTX was a fraud, essentially? I don't know. Was that information available to them? I don't know. I don't think it necessarily was. Because if it was, they probably wouldn't have done it, or FTX would have, you know, been blowing up way earlier, you know? That's just kind of my take on it. Wake up call for YouTubers: be careful who you promote because there's always a chance. Yeah, I think that's the takeaway from, you know, my perspective, or just people in the future. It's like, no, okay, like, make sure you're looking into these companies and who you're promoting, because, you know, if it is a scam, it's a fraud, you know, your followers who trust you are going to be the ones who hurt the most, right, from the whole thing. Half Kyle says he's half and half in the issue. Should do more due diligence, but I also think the consumer responsibility. Yeah, that's kind of how I kind of feel. Like, I don't know how much due diligence could have been done to prevent that. Like, how much was available to even know? Like, they hit it pretty well, right? FTX hit it pretty well. So did they have enough at their disposal to figure that out? If so, then yeah, screw the YouTuber influencer people and sue them, right? But if they didn't, it's tough, because how would they know, right? So, but we'll see how that plays out nonetheless. And, you know, I'm curious to see what the responses to that and what ends up happening. I'd imagine that nothing will happen, and those guys will probably keep doing what they're doing. But that said, I'm going to wrap things up for today. We should do at least another one on Wednesday, and then Thursday we'll have a stream. I think that's the plan, because I'm not going to be around Friday through Monday. So I'll try to do a couple more streams this week. And if you are jumping on in, hit the thumbs up button, that would be awesome. I appreciate you guys a ton for doing that on the way out. And I'm going to be posting or clipping up. I've recruited my brother to help out with some of the shorts. So what I'll do is on the live streams is I'll just clip them up, make a few of those a week, clip them up, and then post some of the highlights of the lives up onto the shorts section of the channel. And we'll see how that goes. YouTube's promoting the shorts, and so that's the plan. So thanks so much for watching. Enjoy the rest of your Monday, and I will see you guys in the next one. Peace out.